Hi there, traders. This is Brad Gilbert with the FX Market Insight for Monday, the 22nd of June. All right, now as we come out of last week, I had a few issues with the site. I couldn't get a few things updated, but we're back online. Now, just having a look here where the US dollar is coming into play. And, we were talking about this a few weeks back where basically the rollback of the lockdowns, if this led to a spike in coronavirus cases across the board, then we should see the US dollar sort of come back into play as, the safe haven default. Okay, and I'm seeing that on the with the yen and the sort of yen not moving at all. It sort of tells me that the dollar is going to be the safe haven. Looking at the dollar index, it had a nice sort of steady incline last week. Now things were changing last week. There was a few updates, a few spikes here and there. A few US states talking about going back into lockdown and these sorts of things. But now looks like globally there's been a bit of a spike, and that's it's a bit weird because basically I know obviously a lot of the rollbacks of the lockdowns have taken place, but there isn't a huge amount of international travel. So it's a little bit of an odd one. But if I just give you a look at the news, I mean, don't forget the media, is not to blame for a lot of this stuff, but there is a lot of weird news out there, right? And it's, the WHO, well, I tell you what, there's with all the, I don't know if it's propaganda, but all the various differing opinions about the WHO and what they didn't do early enough and what they're doing now, and Bill Gates being involved and all these sorts of things, it's put a bit of a cloud over them. But they're sort of coming back and saying, well, as far as they can see, there's been a huge spike, a daily spike across the board. There's, I know there's some in Australia, there's a lot in the US, across Europe as well, and also in China. So we're going to see how that plays out. This all goes back into bringing in the fear back into the market, and that's where the US dollar will benefit, right? Now, probably doesn't suit Trump if the dollar rallies, but I tell you what, this is where I think we're going to see the dollar sort of go through the roof. Now, let me just come back over to the charts. Now, the moves last week were probably a lot less than I sort of anticipated. I would have thought we would have started to see the dollar run aggressively last week, but it looks like the move is almost sort of waiting for this week. Now, the Aussie dollar and Kiwi, for that matter, were trading, or sort of slightly trending down, but now we've seen a bit of a break lower. The RBA governor's already come out today and mentioned that the downturn in Australia is not going to be as severe as they expected. That's given it a little bit of a boost, but I don't think it's going to stop the dollar this week, the US dollar. Now, Kiwi also just sort of breaking down. Euro was the one pair that didn't really come back, okay? Started drifting lower, a bit of sideways, and then went again and again, as did sterling. So I could see Euro and sterling, they are on the way. I expect Aussie and Kiwi to catch up. As I said, dollar yen is, just drifting sideways. That yen safe haven trade doesn't look like it's going to be in play. If anything, it does look like it's going to go lower, but there's no sort of rhyme or reason. One pair here, it's going to be tricky. Like I can see dollar CAD back up towards 138 this week. But what we've got oil back at $39. Now, if the wave 2 comes into play, no one's driving their cars again, all this sort of stuff. So oil should be back at $20 or less. Okay, and that would support a higher dollar CAD. At this point, I can see the dollar rallying, dollar CAD up, as I said, up towards 138 this week. It's going to be fighting oil, so that's going to be a bit of a trickier trade. I do like Euro, sterling, Kiwi, and Aussie as the preferred pairs on that because they don't have that external extra influence. Now, with all the, don't forget, this is all geopolitical, and the media frenzy. They love a bit of fear. They love drama. It's like reality TV. We're going to wait and see how this thing escalates. It's early doors. I expect this is a chance for where we could get some, instead of like just looking at the dollar, starting to look at a lot more cross rates. Because if there's spikes in independent countries, you'll find some countries rallying against others just on the economic slowdown expected from further, like a wave 2 lockdown. Anyway, that's what we've got to start with. What I would expect, I mean, there's so much, weird, or not weird news, but just a broad mix of stuff out here. I would take your time to have a look through this. let the market open up through the Asian session. Now, the Asian equities just opening up a little bit down at the moment, but it's nothing substantial. If I just bring you back to sort of the equity page, move my melon there. Yeah, so the equity market's just opening up in Asia, in Tokyo, a little bit down. Now, the equity market's closed slightly down on Friday. Now, there was also, obviously, Trump had his, I think it was his first election or re-election big bonanza. There was hardly anyone turned up. Donald's throwing barbs about why that is the case. But so anyway, start the week. I think the dollar's going to go up to start with. If we do get an escalation of these coronavirus cases, I think it's an easy trade. The dollar goes up. Socially, I think it's going to be terrible for everyone going back into lockdown, but that's all we've got to deal with at the moment. All right, and that's where we are. Like, look, check out these retail sales figures coming out of Friday. Sorry, I meant to mention this earlier. The Canadian numbers, obviously terrible, but you would expect a bit of an improvement the way things have been sort of being rolled back. It hasn't been the case. That obviously supported that higher dollar CAD on Friday. So that's it for me, guys. I think the US dollar is the pair to be on. It should rally with all the uncertainties out there, and we've got some technical levels to work with. So make sure you check out your charts. All right, guys, have a good one. Cheerio.